Welcome to LLM Dividend Investments. Our CEO and founder, Linda Mitchell, started investing in the stock market 13 years ago. Through a couple of losses, some trial and error, and hundreds of hours of research since then, she was able to develop a system called All Dividends All the Time. And with the system, we will show you how you can make a very generous rate of return on your money, and this is a cash rate of return by using the system to invest in dividend-paying stocks. On behalf of our CEO, Linda Mitchell, and on behalf of everyone here at LLM Dividend Investments, I'm Victor Valdez, president of the company, and I'd like to welcome you to our website and to our newsletter. The first step is getting you started. If you've never invested in the stock market, you want to make sure you have a little bit of money to be able to invest. The ideal amount you want to start off with is $500 for your initial investment. After that, you can invest as little or as much as you want. But to get started and be able to provide a solid building block for a good portfolio that'll perform for the years to come, you definitely want to start with $500. After that, you want to open up what they call a brokerage account. Most people that are new to the stock market obviously won't have one. There's many places where you can get one. Some local banks and credit unions will offer one. There's Ameritrade and other sites that have them. We very highly recommend Scottrade. We don't get a commission from them when we recommend people. We are not affiliated to them in any way, but we do recommend them. When Linda Mitchell got started a while ago, she did about 3 weeks worth of research to see which would be the best way to go to be able to invest money with a reputable company online. And just the same way she researches all her stocks, she put a lot of sweat and effort into figuring out where the best place to go would be. And bar none, Scottrade came up to be the best deal for anyone's dollar in this market. Reason being is they're very easy to use, very user-friendly. They don't charge you anything to open up an account with them. It's just a matter of verifying some personal information. And they only charge $7 per trade, which in some cases, by comparison's sake, is just a small fraction compared to what other sites would charge to be able to execute a buy or a sell on the stock market. And setting up an account is very easy. You can visit a local Scottrade office. To find one, you can go on their website, www.scottrade.com, or you can also set up your account online. It's very simple. Just follow the procedures that they'll give you there, and you'll be ready to go in no time. So you have your money. You've opened up your brokerage account. Now it's time to get started. So now that you have everything in place to invest, you can start looking at our list of dividend earning stocks and then begin to decide how much you want to invest and how much you want in dividends as far as money that you would like to make. Now take a very important note that REIT dividends are usually taxed as ordinary income, and you should consider it as such. The money that you're making in dividends is income, so make sure that you keep a very close tab on your taxes, because the last thing you want to do once you start making a little bit of extra money or once you start getting money back from the money that you're investing is to have a faux pas with your taxes. So make sure that either you or a certified accountant are able to keep close tabs on your taxes and you stay up to speed with that. Now, the longer that you're willing to leave the money in the stock, the more dividends you will end up receiving. We have found out through trial and error and through being in the market for a while that the price of every stock can go up and down a lot, especially dividend-paying stocks. Now, once you invest in a stock, keeping it in your portfolio for a long time is going to bring you a lot of income. It's in my experience, and definitely in Linda's experience, that the price will almost always come back to your buying price if it does experience a dip in the stock market. There's no guarantee of this, but I want to say at least 90% of the time, based on the trends and patterns that we've seen, the stock rebounds. So in case you at some point don't feel comfortable with it, you can always sell it, at least break even. And the best that happened is you were able to at least hold it for a few quarters and be able to bring in some revenue by holding onto the stock throughout the roller coaster or what have you. The reports that we have are going to tell you what we believe is going on in the stock market at the time. Now, most of the time, the market will affect the price of a stock, but it doesn't always mean that the market caused a change on a stock price. That is why we very highly recommend the buy and hold method. The methods that we're teaching, the information we're giving is for people that are interested in keeping their money invested for a long time. We're in it for long holds. We're in it for preparing money to invest for the future. So keep in mind that Whether the price of a stock goes up or down, it doesn't mean anything unless you're willing to buy or sell. In the meantime, while you're holding on to the stock, you will be getting paid your dividend money just for holding on to the stock. We also recommend that everybody diversify, even if you only have a small amount of money to invest. The phrase, don't put all of your eggs in one basket, has always been a good piece of advice in this market. Now, before you buy or choose a stock, you can use the formula that we use to compare one stock purchase to another. It's a very simple formula, and it goes as follows. First, we want to take the amount of money that you want to invest, and then from that money, you subtract the amount that's charged for a purchase. As an example, let's say I want to invest $200 into a particular stock. Because I use Scottrade and they only charge $7 per trade, that will bring the amount of money that I can invest down to $193. Then what we would do is we would divide that amount by the cost of the stock. So let's just say, for the sake of argument, that the stock that I'm interested in investing at this particular point is a company called Acme Widget Manufacturing stock, and it's trading at just $3.38. So I would divide $193 by $3.38, and the result should come out to 57.1. We obviously can't purchase stocks in fractions, so that means that if I round down, I can afford to buy 57 shares of Acme stock at this point. Then I would multiply that amount by the dividend amount that this particular stock is paying. In this case, Acme is a stock that is paying quarterly and is paying 10 cents per dividend. So if I multiply 10 cents by 57, that means that I am getting $5.70 for this stock. And then I would multiply that by the amount of periods that I want to keep invested in this particular stock. Most stocks are going to pay quarterly. There's a smaller amount out there that are going to pay you monthly. And in the very rare occasion, some might even pay yearly. So to keep it simple in this example, we're going to use the quarterly. If you do choose to go with a stock that pays monthly and you want to get your quarterly yield out of that, just multiply its payout by 3, and that should give you what it's giving you each quarter. The reason why we do things quarterly is the stock market operates and balances on a quarterly basis. So it's a lot easier to just keep track of everything in quarters. So in this example, my quarterly $5.70 earnings from Acme stock comes out to $22.80 per year. So out of $193, I'm getting back $22.80. If we do the math, this comes out to me getting back 11.81% a year. That's almost 12% cash return on my investment. Now keep in mind that the dividend payout amount will rise and fall. And this is one of the things that our newsletter and our website will definitely keep you apprised of, more than likely our newsletter. We will constantly be adding to the list of dividend earning stocks as we find them. We may not always own them, but they wouldn't be on our list if we weren't really interested in the stock, or if it was a stock that we weren't interested in getting involved with at some point. So if you see it on our list, odds are if it's not in our portfolio, it would definitely be found on our portfolio in the near future. We will also give you a list of stocks that we do own and how much we're making off of these investments. We are always looking for more stocks to invest in. We will let you know which ones we are watching. We'll also let you know whether or not we own the stock at that time or not. And we will also keep you informed as to why we are waiting to buy if we haven't purchased the stock already. Sometimes it really has nothing to do with the stock and more to do with the economy and what the market's doing at the time. When that happens, what we do is we wait for what we believe to be the right moment. Though, in all honesty, you can't always count on buying at the perfect bottom of the market. We will embark on this journey together with you, and as we have said before, we will do all of the looking and research for you. Our advice is always going to be at your disposal. You are always more than welcome to do with it as you please, and your feedback will always be appreciated and welcome on our site. And you are always more than welcome to email with any questions that you have at any point in time. We're very excited to take this journey with you, and once again, on behalf of our CEO, Linda Mitchell, and everyone here at LLM Dividend Investments, I'd like to welcome you to our site and our newsletter.